Hey guys, just want to do a closing market update real quick. I want to touch on some of the softs and greens too, because we keep talking about that and I haven't gone through them. S&P's failed right at the top of the range. We shorted today up there 2190 right into the old highs. So far you have a pretty prominent double top. We'll see if it holds. I mean it is what it is. So 2191, that's definitely the top of the range. So anytime the trend's going to change, right? If you're in an uptrend, the first thing that needs to happen is you have to fail to make higher highs, and then to reverse the trend, you have to actually start to make lower lows. So to me, that's not going to happen until you break 2165. And then on a weekly and monthly basis, you're not going to have lower lows, so you get back below 2140. But nonetheless, that was pretty good failure today. Um, Forget what cycle I was looking at. Oh, the hourly. So we came up into the prior resistance on the hourly. The cycle crossed, and then it still hasn't rolled back over, but it's just a pretty clear top to bottom cycle. Today you had bonds rally and S&Ps. So we put in the active trader room today. We were taking some profits into basically the high of the day. But this is bullish now, so the 30 is rising. This wave structure is positive. We got new higher highs above 172.09. So if you pull this regression channel forward, whoops. If you pull this forward, the top of the range is like 173.5. If you want to use the old highs, at the top of the range is 173.29 or 174.22. But this is still a range trade. I mean, look how choppy this has been. So keep playing it from the long side. But I'm going to lighten up into there. You want to rebuy the dip down here. Stocks, bonds, gold. Gold didn't really participate with bonds today, and I did punch some out. So I'm only long, I think, one lot now. So I sold into this pie area. Again, that's the hourly chart. So this is kind of rolling over. Um, we'll see if it takes out 1335, then maybe it'll go back and retest 1311. I'm gonna have to. We'll play some defense then if that happens. So I'll probably won't. I'll probably put one more piece on down here. 1335. And then if it doesn't hold here, I'm okay with getting rid of that, just keeping a one lot or getting flat. So this is going to be key 1335. We'll keep an eye on that. Copper made new lows today. That's pretty bearish for global demand. I mean, that just looks awful. I mean, you really can't tell me that global demand's bottomed and the copper chart looks like this. It's just nasty. It wants to go back to 205. So I'm still tiny short there, and I don't really feel like covering it. If I had more on, I would cover some here because we're a little extended, but I'm just a tiny couple lots left, so I'm just going to let it run. And then oil, depending on what contract. See, I missed this chance to put some back out. So I covered into this low. It was pretty much the dead ass low, and then it bounced back up here. So I feel like I missed an opportunity. You can see on the 15-minute chart how we failed right at the underside of pi. So that's good for the bears. We want this to roll back over. That was a nice failure though. I missed that. Shoot, I was thinking of selling maybe like 48.5 or 49. I just missed it. Wasn't paying attention. Let's do Let's do some grains real fast. I'm going to just go through these real quickly. Corn. Oh, that's bearish on the 15-minute. But if we top down, there's a few guys that are thinking long here, which I'm okay with. This is a bottoming tail. If you think of this as a wall, right? I talk about building these walls. These fluid moves down. So this is one bearish wall that the bears built. So you can maybe retrace about halfway of that wall, which would be in line with pi. So there's some room for it to go back to 370, 380. But you definitely don't want it to break here because the overall trend in corn is still down. It's part of this whole deflationary multi-year move we've had going on global macro. So these are the lows from 2014, and there's no reason that this cycle can't keep going lower. And I expect the weekly and the monthly, all that's going to stay bearish as long as the dollar index is above 92. You can see that the 8 is this green line that's pointing down. So it's a little bit of a, there's a conflux of two different trends. Is the daily trend going to move back up, or is the weekly going to dominate and cap it right here, take out these lows, or at least retest the 318 level? It's yet to be seen, but this is a good spot for this to fail. It's going to be a battle between those two different trends. Wheat's been bearish. I really like it on the weekly. It just shows you clear lower highs. All right, and then look at this 8 again. The same thing on corn I just highlighted. It's the same thing that's happening on wheat here. So I don't have a position there. That's a sell setup though. When you take out these swing lows like that, boom, that candle, short that, stop above the high. I'm going to think about that for tomorrow. I'm going to write that one down. That might be a good short wheat. Oats are bearish. As you can see, it's below pi. The 200's descending. You're making lower highs. All right, this wave structure is down and negative. So oats are bearish. Soybeans. I'm short some into this band structure. I'm just being patient. I want this 8 to roll back over to sell some more. So we'll see. I kind of wanted to just lean a little bit core short around this area here. And then again, most of the softs and grains, everything's bearish. So this is the long-term downtrend. So I'm looking for this 8. The 8 period moving average I use as an indicator for what I call the immediate trend. So that's the trend that's usually happening right now. Like for when the 8's upward sloping, this was the trend that was immediately happening, even though it was in the context of this bigger picture downtrend. So when you have a downtrend and the 8's moving in your favor, you're going to have the most momentum. When it turns back up against your larger trend, sometimes you have to be patient reselling, and then you want it to come back below the 8 to get more aggressive. Same thinking here. So you would have had to be really patient here, and then maybe you got heavy into pi, but the key was you wanted to see this 8 roll back over, and that's what's happened. So we'll see if the 8 halts the price action right around here. That's kind of what I'm playing. That's the edge we're playing anyway. I'm not going to do soybean meal, soybean oil. I already did wheat. Did we do corn? I think we did corn. Yeah. Well, we can look at some of the softs. Cotton. Cotton's a little. This is a little bit more neutral because it was bearish. This is a big fat bullish bar here. It's kind of neutralized all this downtrend. So you have, again, it's mixed. You have this trend which is bullish. It's more the intermediate term. You can see how the 8's pointing upwards toward 2 o'clock. then you made a prominent lower high relative to this. So this is probably choppy. I don't really see a good edge on cotton. And then coffee we're bullish. This is pretty strong. I mean, I'm aware that this was a downtrend, but I think this daily's taken over. So I like this movement to new higher highs. You pulled back into the 30 that's rising. It's kind of scooping. So I bought some there. Already took a little bit of profit. I'll take some more into these highs around 155 and then see if we can get a move up to 170, which is pie on the weekly. Go down to the daily. The next place we care about, this is 155. So look at that. We bought the low right near at the lower bands. That was a great call. And I think we're going to get rewarded on that. I think this one might make new highs, especially if the dollar keeps getting weaker. So it's a little bit of a hedge against everything else that we're playing long dollar. OJ, that's bullish. This is a power trend. You can see how everything's rising. So that's bullish. I don't have a position there, but don't fade that one. Let's do cocoa. This is just a range trade. This is a sloppy mess. There's nothing really to do there. You want to play the ranges on cocoa, you can, but it's just really choppy. So you got to break below pi for anything, you know, a little bit more constructive to play out. And then all these highs. So you just play a range here, 3,200 to 2,700. And then lastly, sugar. This is strong. This is a power trend on the weekly, other than the fact that pi is kind of flat. Yeah, so on the monthly level, sugar looks kind of like gold, to be honest, gold and silver. We had this 2 to 3 year bear market, and now that's just started to turn. So I'll be a better buyer in sugar. And that matter of fact, this is what I call a bearish candle ignored, or BCI. So this was your first move up, pull back, took out the high. You can buy that, and then this, when you have one single red bar in the context of an uptrend, that's a buyable event. If you take out those highs, you can add to your position, and then usually that candle will mark the middle of the move. So that happens. It's just the way I can show you that trend and that pattern. It plays out all the time. So if that's the middle of the move, you can expect to move probably back into 27 on sugar longer term. If we take out that high, that makes a lot of sense. And then obviously maybe even higher. So we want to get a little bit bullish. Look for opportunity to buy sugar. We're already long coffee. That looks good. And then maybe we'll short some wheat. I think that's pretty much it, guys, for tonight. I'll see you in the room in the morning.